chatting to Salena. We've just been chatting for 45 minutes, so you're just joining us for the end of the conversation. But Salena is the founder of Freedom Warriors. But Salena, why don't you tell me a bit more about that? Because this might be the first time that that people watching may have heard from you. So you can do a much better job of introducing yourself than I probably could ever do. So tell us.
Thanks, Shane. Yeah, no, look, I'm a chartered accountant by trade originally, a reformed accountant who has had a real passion for property and strategy over the last couple of decades. More recently, I've seen a bit of a hole in the market in terms of, you know, my own journey with property investing. And what I've done is I've created a program called Freedom Warriors, which is specifically designed for people who really want to step into that next level of property investing in terms of the results they get. It's very much about blending the best of the strategy that's available here in Australia with what's available in the US in a safe and conservative way. And I guess the key difference between this and what a lot of other people in the property space are doing is I'm bringing people to the table, trusted people who bring vetted opportunities, so that participants can cherry pick and identify the opportunities that feel like they're a fit for them, rather than, I think, what a lot of property people do is they advocate one shoe or one strategy fits all.
Yeah, perfect. Now I've got a question for you. It's where that, first off, thanks for the introduction, but it's where that property investors are born with a portfolio, but that's not the case, is it? You've got your portfolio over time, and tell us about how you got started in investment property.
Yeah, look, accidentally is probably the best word to describe it. I was probably very anti-property when I was younger, partly because I didn't really understand debt and that it could be a very powerful tool. My husband was the one who first became interested in property. He would put paperwork in front of me and I would blindly sign it. And over time, I kind of realised that was pretty negligent on my part. So I started to look at what he was doing. And I just really the penny dropped that we were making more income through our property investing than we were in our jobs. So it was a very slow and gradual process. And I think, I really, once I fell in love with it, I went all out and really set about educating myself from the ground up. I worked for developers. I had the accounting background, which was really useful, but, I've done pretty much every single property strategy I could get my hands on, for the reason that I've always been really passionate about the play and the creativeness of property investing. So I've had plenty of cuts and bruises along the way. I've lost significant amounts of money over the course of 2 decades. But I think that's given me the benefit of experience, which means that, I'm trying to really help people avoid those pitfalls. But yeah, there is no get rid. And I think, unfortunately, there's a lot of education out there saying otherwise around property. Property is definitely a get rich slow, game plan, really. So that's what I'd say about that.
Yep. No, I definitely agree 100%. Particularly the people that I tend to work with, they tend to have a short-term focus, and a lot of the time, the challenge is sort of lifting the headlights, if you would, and going from being focused on the next few weeks to actually, hey, let's talk about 5-10 years. But you mentioned before that there's something that I think everyone needs to know, no matter what you're investing in, and that it's not a smooth road. So you've obviously had some challenges along the way.
Absolutely, yeah. Look, I think if I had to summarise the thing that I've learned that has been the biggest lesson, is that worry as the secondary thing. Focus on the strategy and the game plan first.
Yeah.
Be clear on what you want, your aspirations, the major milestones in your life, how much risk you're actually prepared to tolerate. Be careful about who you take advice from. But if I'd had that game plan first, I'd probably be, 10 times wealthier than I am. I feel that I was very scattered initially. I took advice from lots of different people who may or may not have been qualified. I undertook investments that, in hindsight, were not a fit for what I was trying to achieve. So, if you're going to invest in anything, invest in a game plan first, and worry as a secondary thing about, what. Because I think there's too many people talking about hotspots and how to make a quick buck. And I think, unfortunately, property is so expensive here in Australia. And if you buy one or two poor investments, it's not that you can't undo it, like everything's undoable, but it just puts a massive hole in your timeline. Yeah. So if you want rapid results, just spend a few minutes and get the game plan first.
Yeah, definitely. And again, I agree 100% with that. And we just spoke about a statistic just before I hit record in terms of the amount of people that have either one or two investment properties, and the amount of people who have one is like 71% of all investors. So not the population, all investors, and 90% have two or less. So to me, it says that one, a mistake early in the portfolio tends to either hamstring or handcuff you, and sort of doesn't allow you to progress. So on that note, what are some of the mistakes that you see people make when it comes to building an investment property portfolio?
Oh gosh, there's so many good ones. I think buying on emotion, I see that often. Human beings are a funny beast, and they're often driven by fear and fear of missing out. And so I think what a lot of people have exploited is that fear of missing out, and used that to create emotion, and people have then bought in a very short space of time on the basis of limited information and emotion. So having a really robust business case is really important. So I think don't ever buy on emotion. Make sure you structure your finances properly, because that can be a massive handbrake for you. If you think about the price of property as a bell curve, a lot of people focus at either end of the bell curve. So they go for the super blue chip properties, or basically the slumlord type properties. And what I feel about that is that, and I've done both ends as well, is when you buy at either end of the bell curve, you are not only limiting the pool of people that will potentially one day buy it from you if you need to sell it, but the volume of good tenants at the top end is small, and the volume of not so good caliber of tenants at the bottom end is also large. So you sort of for me, it's about making sure you try and stay as close to that median, maybe slightly under, because you want to be as liquid as possible even within property, and you want to know that you're going to get a good caliber of tenants. So I think buying outside of that sort of bell curve is you need to make sure you don't do that. You don't spread yourself at either end.
Yeah, I think that's a great point too, because a lot of people tend to think about the actual purchase of a property rather than the end result thereafter, which is
100%.
Rent the thing out or eventually sell the thing, or to get growth and to get income. But many people are just like, well, I just want a property for the hell of it.
And especially with younger investors who are very keen to get their foot in the door. I've worked with some younger people, and I've been able to show them, if you just wait another 6 months and you just get a little bit more of a deposit together, this whole world of other opportunities opens up to you. And it may not seem like a big distinction for them at the time, but if you can show them that if you go into this next caliber of property, the end result in 10 years or 15 years is almost like 40% more than if you just get your foot in the door on the first thing you can afford. So I would encourage people to be thinking that way, like it's a patience game. And if waiting another few months or another year or so, a big difference down the track, then time is your friend, but you want to weigh that up.
Yeah, exactly. I mean, on that as well, for the first time property investor, So let me put a scenario to you. Like if we've got someone who's owned a property, they own their own home, living in it, and they're looking to take that next step to evolve from being a homeowner to a property investor. What's the biggest tip or the biggest thing that you tell them to keep in mind as they take that step?
Oh, that's a really good question. I'm a huge advocate of dipping your toe in carefully and slowly. So even if you were someone with, $1 million in the bank account, what I would say is don't let it burn a hole in your pocket. Be informed when you make the decision to invest. And really it's about saying, don't invest for the sake of investing. What's the outcome that you actually want to achieve through your investing? And then it's just really a case of reverse engineering. And I think people have a perception that you need a lot of property to create substantial wealth, and you actually don't.
Yeah.
People can buy 2 exceptional properties and it can make a $2.5 million difference to their end game.
Yeah.
So I guess the advice I would give is just take your time, be educated, and think about what you actually want to achieve, and then reverse engineer it.
You're using my language. I love it. The reverse engineering. It's awesome. That's a very good point. And a lot of people sort of focus on the number of property, right? Where the reality is like they're thinking, 1, 2, 3, 4, 5 properties, or I think I've seen a dude advertise on Facebook. He's got like 250 properties or something. And I think you know who it is, but it's not necessarily the number of properties; it's quality. And if you've got $500,000 properties, or but have no growth prospects and a limited pool of tenants, how does that compare to a higher value property that has a large number of tenants and high growth prospects? So it's a great tip. But I'm hearing an alert, so I think I might be running out of time because I'm on a free Zoom. Or is that you buzzing?
I don't know, actually. I'm not sure what the noise is. Apologies.
No, that's all right. I thought it was on my end. So I think I'm using the free Zoom. They're still limited?
Right.
Maybe they do. Been talking to one.
Sorry. There you go. I'll just turn my mute thing on.
Perfect. No worries. But yeah, one final question, Salena, because I'm conscious of your time. If there was one thing that you could, if you could wave a magic wand and you could get one piece of information in all property investors or people who are thinking of investing in property, if you can get one piece of information into their head, what would that be?
Well, these are tricky questions you're asking.
That's what happens.
One of the things that one of the things that I've definitely been advocating more recently, and it's been partly around my evolution and understanding of investing, is I think people are all about tooting the horn that's kind of self-serving. Property people will tell you about one particular strategy that you definitely should be doing if you want to make money, and another property person will say something different. My view, and then you've got shares versus property and all of that, but what I would encourage people to adopt is a filter of being investment agnostic. In the same way, like it's almost not like a religion, but don't let people kind of bully you or make you believe that there's only one way. Don't be partial to one way over another way, or think that one investment vehicle is better than another. Be completely agnostic about it. Have no preferences, and really just say, show me the outcomes, show me the money. Like, people should be more concerned with outcomes than they are about which vehicle is going to get them there.
Absolutely love it. It's my thought exactly as well, where people sort of, I hate that property versus shares argument. I say cross out the verses and it's property and shares. It's whatever suits the strategy, whatever is going to get you to your outcome is what we should be implementing. But perfect. But Salena, I mean, I'm very conscious of your time, so I might wrap up. But if anyone wants to find out more information about you and what you do, where should they go?
Um, well, my business is phoenixwealthgroup.com.au, so you can find me on the web. Otherwise, it seems these days the easiest way to find people is through LinkedIn or Facebook. So either of those two ways is fine as well.
Yep, perfect. And you do share some incredibly useful stuff on both LinkedIn and Facebook. So definitely, if you're watching this video, I'm looking at you, video watcher. Make sure that you connect with Salena on LinkedIn and go and give Phoenix Wealth Group a follow on Facebook and connect with her on Facebook as well. But thanks, Salena. Do you have any final thoughts? Anything you'd like to? Is there any question that you were hoping I was going to ask today, but I didn't ask?
Oh no, I think you actually asked some very thought-provoking questions. So yeah,
Pretty
look,
good, isn't it?
yeah. I mean, I'm really all about seeing people progress and develop a healthier relationship with money.
Yeah.
You know, I choose property because it's the vehicle that I've felt most at home with. But I agree with everything you're saying. It's not, things are not mutually exclusive. I think it's like, how do you blend the best of everything and make it work?
Yeah, perfect. Thanks so much, Salena. For our viewers, I'm going to stop there, so I'll speak to you soon.